Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi, kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah.
And don't forget, once this is done, we still need a design that can represent all of us, you know.
We can make it, right?
It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kaini? Maru? Amay?
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja diam tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that the lotus
Doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty, untouched by what tries to hold it down.
it is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Good morning, everyone. Welcome back to Monica Part 8. Okay, so if you look at the S&P 500, well, it finished lower on Thursday session, slipping roughly around 0.54% to close at 6908 points as sharp 5.5% drop in Nvidia weigh heavily on the broader index. So I think the market pulled back as investors aggressively to profit on the big tech following the Nvidia's earnings. Though it was worth highlighting to all that the major I mean the overall of the non-tech stock actually posted gains. Right. So I expect a mix and also a rotational opening in today's session as traders continue to shift capital out from the high-flying AI names and into more resilient, um, tra- more traditional sector uh, um, sector, right? So for the China A50 futures, will finish also lower on Thursday session, breaching this 14,700 points support mark level as the recent post-holiday rally ran out of steam. So I think the market pulled back due to the profit taking as well, particularly in those property and also energy sector uh, for the China 50, right? So I think investors preferring to stay on the sideline until the Beijing release new economic policy signals. I think next month's into next month meeting, right? So for now, expect a cautious and also range bound opening in today's session as traders or investors remain hesitant to make a major position for now, right? So for the WTI crude oil futures will finish slightly lower um on Thursday session, slipping roughly around 0.3% to close near 65 $20 per barrel after a highly volatile session yesterday. So the market pulled back as the massive 16 million barrel jump in the US uh US inventory recently. Also, I think this is one of the largest build-up in 3 years, which also overweighed the lingering supply fears tied to the tense of US and also Iran nuclear talk recently, right? So yeah, I think we do expect a choppy and also highly sensitive opening for upcoming session as traders or investors still continue to weigh this heavy domestic supply against the unpredictable geopolitical headlines heading into the weekend. However, for now, we still keep our long position, our positive bias unchanged, targeting for the $68 level, also towards the $70 level resistance, right? We keep our stop loss at $58 levels for now. Right, to our Malaysia market, or if you see here, the FBM KLCI and also the FKLI finish lower on Thursday session. I think with the cash index dropping somewhere around 0.39% to close at 1740.94 points for the third straight session, right? So yeah, I think the market treated under pressure as well as investors. As the profit taking kick in, heavily selling off the banking and also the financial blue chip stocks, despite some positive move into the tech momentum was seen last night in the Wall Street. So I think I expect a cautious and also cautious but a little bit of range bound opening for today's session. As some traders could look for bargain hunting opportunities while waiting for the fresh global cues to restart the broader uptrend, right? I think Also for yesterday, looking at the day-to-day movement, can see that the majority of the sector are pulling back. However, construction, continue its gaining by 1.52% yesterday. Into the Malaysia trading stocks, we have AMMB today, or Mbank, right? So I think the stock it's on its breakout formation higher at 6 ringgit and 60 cent level, on a strong volume. So with that, we expect a bullish momentum to keep strong, and the stock able to propel higher towards the 6 ringgit and 90 cent, followed by 7 ringgit and 15 cent level. If the stock to clear below this 6 ringgit and 35 cent support, I think this could reverse the course, and it might shift or trend lower as it continue to cross below this 21-day moving average. Also, next we have Orchim. So the stock is experiencing a breakout as well at 1 ringgit and 6 cent level. So if the stock remain bullish, you expect the price to reach somewhere around 1 ringgit and 12 cent in the coming session, together with high volume. Second resistance is seen at 1 ringgit and 70 cent level. Also keep an eye at the 1 ringgit and 1 cent level for any attempt of reversal. So today we have two breakout stocks, which is Mbank and also AMB, and also Orchim. Right, and lastly for the FCPO, will finish slightly it finished lower on Thursday session, pulling back to close somewhere around 4005 per ton yesterday. So the market traded, I think overall still under pressure as the sluggish February export estimate and also a stronger ringgit dampened the foreign buying interest, while the weakness in the rival edible oil also added to the bearish momentum. So I think at least for today, expect cautious and also defensive opening or movement right into today's session, as the investors weigh these weak export figures against the anticipated seasonal demand ahead of festive season, right? I think I'll stop here and pass you to the next presenter. Thanks everyone, and happy reading. See you guys next week.
Thank you, Aiman. Hi, morning. This is Vanessa from the Warren team. Gong Xi Fa Chai, and happy Chinese New Year to all my fellow friends. Okay, so just a quick one. So recently we actually have seen very high trading volume in Sunway Construction Berhad, and also Sunway Berhad as of yesterday. So if you actually had an aligned view with our analyst Adam, that actually there's actually two reports about the Sunway Construction. So if you actually have followed, so Sunway Construction, Suncon C52 is actually one of the warrants that is issued by RHB Investment Bank. So it was also one of the top traded Suncon core warrants in the market. Okay, so I'll just share on the live screen because it's easier to see right here. It actually gained 122% from Friday. All right, so how do I look at it? So this is a screen on the RHB warrant website. And if we scroll down, you'll be able to see the past performance chart. It's not as strong as your trading view, that's for sure. All right, but this will be able to provide you some of the insights on the warrants closing price against the mother share price. So bear in mind, one additional information for you. So for all structured warrants, the last time, the final time for market making will be 4:43 p.m. Okay, so 4:44 will be stopped already. So you don't actually get to participate in the auction session. So 4:43 will be the last minute for you to trade structured warrants. Okay, so however, so this is actually the chart for you to compare. So on 23rd February, which is the last week, and also when Adam actually share his report on the results, the earning results of Sunway Construction. It was around like 9 cents. So as of yesterday, it actually closed at 20 cents from the price of mother share 6 ringgit and 30 cents, and it actually went up to 7 ringgit and 25 cents yesterday. Okay. Yeah, so with this, right, this is the details. Of course, it's not indicating that Sunway Construction mother share is going up continuously. However, it's actually a sharing for you. So how do we look at it is that we look at effective gearing, 4.8 times, which means that 1% move in Sunway Construction shares will actually cause Suncon C52 to move by around 4.8%. So this is a multiplier. While the sensitivity, 3.7 ticks, means that how fast does Sunway Construction Suncon C52 reacts to the movement of the mother share. So we normally use these live price metrics to trade. Okay, so why am I sharing with you is that yesterday we also have seen a very high trading volume in Maybank stocks and also the Maybank warrants. Yeah, so I would say yesterday was a big day for all of us, right? Because the Maybank shares actually have moved up and down, up and down. So we actually see that Maybank shares itself yesterday, when I actually checked on it, it was about 60 million units traded. While for Maybank C2F, which is the RHB issued warrant, actually traded 18 million unit yesterday as well. All right, with this, right, I would like to share with you on what actually happened. All right, so this is what we call a trading in the warrants. So it does not mean that 80 million units is that it is a net sell volume from RHB. Like net sell means that we are selling and selling, people buying and keeping. While yesterday we actually see very high trading volume where people actually buy and sell. So for Maybank C2F is already I would say it's actually quite deep in the money. You can actually look at this left hand side. Maybank C2F, this is a bit wrong lah. Effective gearing at 298. 298. This is actually off market. You actually can look at the metrics. So sensitivity, it was around 2 ticks to 3 ticks. So when Maybank shares, the underlying shares, move very fast up and down from after afternoon session, that was like around 11:50 and then it moved up to 12 ringgit and 2 cents. So you can actually tell from 11:50, the price for warrants is actually way below here. It was around 15 cents, 14 and a half, 15 cents of the warrant. And then it actually closed at 12 ringgit and 2 cents, which was about 20 and a half cents. All right, so there are traders, those traders that I would say intraday traders or maybe scalpers, they actually look into warrants like this, very sensitive, so that they can actually enter at, for example, 19 and a half and then exit at 20 cents. So this is how they actually make 1 tick or maybe 2 ticks of gain from this type of warrants. Right, so there's actually these 2 warrants that I would like to mention as we actually saw very high traded volume the past few days. All right, so that's all from me today. I will pass to the next speaker. Thank you.
Hi, morning. So we have a report on Maybank today. This is on the results note. The fourth quarter earnings were in line with our as well as consensus. They reported a net profit of 2.7 billion ringgit, which was up 2% Q on Q, 6% year on year, bringing the FY25 earnings to 10.5 billion ringgit or up 4% year on year, 101% of our consensus estimates. A second interim dividend, 33 cents, was declared. This brought the full year dividend to 33 cents declared, bringing the full year dividend to 63 cents, which translates to a payout ratio of about 72.5%. Highlights from the results, really the main one was that the sequential and year-on-year PATMI growth was led by higher net interest income, with margin expanding by an impressive 7 basis points Q on Q and 3 basis points on a year-on-year. This is on the back of more effective liability management strategies, such as allowing deposit growth, loan growth to outpace deposit growth, shading higher cost fixed deposits, as well as tapping into the cheaper non-deposit funding sources as an alternative. There was possibly also a lag impact from the repricing of deposits following the OPR cut in July. Elsewhere, loan growth was quite muted, while the impaired loans were down % Q on Q, thanks to lower impaired loans in Indonesia. Briefing highlights, they have actually provided a decent set of guidance for 2026. They are guiding for the ROE to rise further to 11.8%. They are also guiding for some slight margin expansion on the continued liability management strategy, as well as a loan growth of about 4 to 5%. So yesterday's share price in the afternoon, you see that volatility was really not too much in reaction to the results, but more because if you recall in last month during their strategy briefing, they said they were going to share more about capital management in the results briefing in February. But yesterday, when they were asked about it, management said that they were not prepared to share just yet. Although they did say that they think there is some excess capital at the subsidiary that they are trying to look to unlock, while they're also trying to see if they can optimize capital structure. All in our FY26 and 27 earnings are relatively unchanged, but we raised our target price to 13 ringgit 20 cents from 12 ringgit. This is based on a higher ROE assume of 11.5% from 11%. Maybank's payout ratio of 72 to 73%, and if you plus that with say a mid-single digit earnings growth, that's actually enough to give you some ROE accretion. Again, because the payout is actually very high. So we maintain buy on Maybank with a new 13 ringgit 20 cent target price. That's all from me. I'll pass you to the next speaker.
All right, good morning, everyone. So today we have a results review on IGM Corp, which reported its 9-month FY26 results, where core profit was at 289 million ringgit, which was 18% year-on-year down, which underperformed ours and Street's estimates, making up 60% of ours and the consensus full-year projections. So the main drag actually occurred from the sluggish property segment. But before that, it is noteworthy that the construction arm of IGM saw a very strong PBT growth of around 112% year-on-year. And this is not really a surprise to us, given that we have previously done, through our previous ground check reports, where we highlighted that IGM, has reached a very meaningful progress, particularly for its warehouse and industrial projects in the Klang Valley area, especially in Shah Alam. And margins were also, quite high, given that jobs with lower margins have been completed. And going back to the property segment, it saw a PBT loss in the third quarter of FY26, given the sluggish trends of launches and the absence of land sale in Penang, which was actually present a year ago. Order book wise stands at about 8.4 billion, which is the highest in, I think, 5 years. We understand that there are still some tenders for data center jobs, and not to forget the Nusantara civil servant housing job worth around 1 billion ringgit, which we think could see its outcome maybe in the second half of the calendar year of 2026. So given that results underperform expectations, we trim our FY26 to 28 earnings forecast by 13 to 14% to reflect a sluggish property segment. But all in, we retain our target price of 3 ringgit and 15 cents, which reflects the takeover offer price from Sunway Berhad. So that's all from me. I'll pass on the floor to my colleague, Jeffrey.
This is the fourth quarter numbers for Time.com. Essentially, the numbers were in line, just about 2 to 3% ahead of our consensus estimates. Continuing on the balance sheet optimization drive, they've declared a special interim dividend of 9.73 cents. This is actually on top of a final DPS of about 17.3. So total payout will be on 25th of March. If you actually include the earlier distributions, they had 2 rounds of specials before. The cumulative dividends works out to about 185% payout in totality, or ordinary payout about 66%. Now, very timely indeed that they're also raising their DPR policy. They are now, saying that they should be paying between 50 to 75% of core PATAMI, 8% previously. This is actually based on normalized earnings, excluding one-offs. In terms of the results proper, very routine growth. Core PATAMI was up 12%, revenue 6% growth, with improving margins as well as higher share of associates. If you look at the interest income, that has actually come off a little bit. They're using their cash power to actually return cash to shareholders. That interest income will continue to come down over the next couple of quarters. PATAMI fell 2% year on year. Basically, they had a bit of a write down in terms of the value of its Thai associate, that's Symphony Communications in Thailand, due to the growing macroeconomic risks in that particular market. So if you exclude this impact of the write down, PATAMI actually grew quite commendably, about 18% sequentially, or about 17% on a year-on-year basis for the quarter. Retail continues to spearhead growth. Fiber broadband premises passed has now crossed 2 million, 2.05 million to be exact, about a month ago. So they're getting into a lot of tier 2 cities and towns, also making fairly good inroads into the single dwelling units or landed premises. For those of you who recall, they are previously very strong within the multi-dwelling units and apartments, but they've continued to actually lay fiber into gated communities and into selected areas where the existing fiber routes are already there. So giving the TMs Unify a bit of a run for money. Sub ads for the quarter were about 7,000. Nothing to shout about versus that of TM. Obviously has got a bigger network. TM has added about 21,000 this quarter. But if you look at times ARPU in terms of the fiber broadband business, it's still fairly robust. It's about 107, and there's been a lot of up trading activities. People actually moving up to a higher speed plan. Now the DC business, which is the 30% associate AIMS or in Cyberjaya, that is also expanding quite aggressively. Heightened demand for co-location DCs, basically across the Klang Valley as well. So they're in the midst of they've just bought a 4 billion. They're investing a 4 billion in a new AI DC over in Cyberjaya. I think there's going to be a potential cash call from this from shareholders. And just last year alone, Block 3 in terms of AIMS and Cyberjaya, they've expanded. Time actually injected about 56 billion in terms of equity. So management saying that with the expansion plans, further expansion plans and all that, they will be heeding that cash call by AIMS, potentially looking to invest over 100 million coming up this year as well in terms of the DC business. Special dividends, I think, will remain a regular feature for this stock. Management has previously said that they want to actually manage the lazy balance sheet, so they're targeting net debt EBITDA about 1.5 times over the next 2 years. So fingers crossed that they'll be paying a lot more. We've done a bit of analysis in terms of how much they can actually pay. It's about 1 ringgit and 20 cents if they actually meet that 1 to 1.5 times target net debt EBITDA. So it's just a question of time, but I think it'll be a regular feature for this year as well as next year. Some changes there in terms of forecast, very minimal. Housekeeping 1, 2, 3% for 26, 27. We've also introduced our 28 numbers. The CF target price is now moved to 6. Obviously, share price has done fairly well in terms of the capital management narrative. At the current levels, it's trading at about 2, just over 2 standard deviation from historical EBITDA mean. A fair premium in our view, but with the big upside already, we're maintaining a neutral call. Okay, that's all from me from time. Thank you so much.